Hello friends and welcome to this video of Accounts Made Easy. In today's class we are going to continue with a few more questions on marginal costing. Now these questions are really important ones. We are trying to increase our difficulty level a little with each video. So in this video we are going to do a few problems with really good difficulty levels. So kindly pay attention to it carefully. Let's do our question number 8. What it says a company makes rupees 5,000 profit from 60,000 sales. Now, what they are saying is profit earned 5,000 from a sales of rupees 60,000. Fixed cost are rupees 15,000. And what we need to calculate is our break-even point. So what we do is, let's start with the first part. What we need is a break-even point. All right. Now, break-even point. Remember the formula? What's it? Perfect. It is fixed cost, which is then to be divided by PV ratio. Now, look at the question carefully. In the question, they have already given us that there is a fixed cost of rupees 15,000. That job is done. But one thing which is not given is our PV ratio. So we will calculate PV ratio as contribution. And then that is to be divided by sales, also called as net sales, and multiplied by 100. Okay, so contribution will have to be multiplied by 100. Now let's look at this. Do we have any information about contribution in the question? No information about contribution. So let's calculate this. So contribution, we have various formulas. Look at the information in this question carefully. We have information for profit and we also have information for fixed cost. So the formula that we use here is fixed cost plus profit. Okay, so what is going to be our fixed cost plus profit? Let's write this down here. Our fixed cost is 15,000 and our profit is 5,000. All right, so what we get is our contribution will be rupees 20,000. I hope we have all understood how we got our contribution at 20,000. Now, once we have the contribution, calculating PV ratio will be a very easy thing for us. PV ratio, what will be this amount? We have to calculate with fixed cost, which is PV ratio, we have to take the contribution, which is 20,000, and divide the contribution by sales, which is 60,000, and then this contribution we will have to multiply it by 100. Okay, so if you do this calculation, the answer that you get is 33.33%, which means we have got our contribution at 33.33%. Now the problem has become easier for us. Now calculating BEP is a comparatively very easier job. It is fixed cost, which is 15,000. We have already seen that here. Fixed cost 15,000 given to us. This will be divided by PV ratio, which is 33.33%. So what do we get exactly here? BEP is 45,000 rupees. The answer that we get is BEP is 45,000 rupees. Everyone look at this calculations carefully. Okay, because this is an important question. Understand how we have done. We wanted to find BEP. We gave the formula and we realized we don't have the PV ratio. So we wrote the formula for PV ratio to calculate it. And we realized, oh, we don't have contribution. So we wrote the formula for contribution. We calculated our contribution. So guys, step by step, we need to move. Once we have got the contribution, we know we can calculate PV ratio. Once we have got PV ratio, we can calculate our BEP. So this is exactly how it has been done. Okay, I hope everyone has understood this very clearly. Now let's look at the second part of this. What does this say? It says a company's sales are rupees 1 lakh. fixed costs are 20,000 and the break-even point is rupees 80,000. Now this is what you need to understand, that they are saying the break-even point is 80,000 rupees. What we need to do is find profit it has made. Now in this case, because the break-even point is given, what we do is we do two calculations at BE sales and then at actual sales. All right, so first thing, before I start solving it, one thing that you need to remember is break-even point is a point where our contribution is equal to fixed cost. Normally people try to remember break-even point, no profit, no loss. But what we need to remember is break-even point is a point where our contribution is equal to fixed cost so that our profit becomes zero. Let's start with this. We have information for sales which is given to us at rupees 80,000. They have said this in the question that break-even point is 80,000. From this, we need to deduct our variable cost. We don't know that information. That's okay. Let's leave it for the moment. Now what we get is contribution. Obviously, we will not know what is contribution. We don't need to worry. But then we know the fixed cost is given to us in the question as 20,000. Obviously, fixed cost is 20,000. Profit will be zero at this point. Guys, remember what I said. Break-even point is a point where contribution is equal to fixed cost. So I got my contribution as well. Understand this. If my sales are 80,000, my contribution is 20,000, then please tell me what will be my variable cost? Exactly 60,000, the balancing figure between the two. All right. So at break-even sales, we have got the information. Now let's look. The actual sales are rupees 100,000. That's 1 lakh. I don't know what will be my variable cost here. So what we can do is we can go back to our basics and apply the simple rule that we have learned, which is called cross multiplication. What is this rule called? Cross multiplication. I can simply multiply this 80,000 with X and 100,000 with 60,000. So if we look here, it would look like 100,000 or a lakh of a rupee multiplied by 60,000, which is then to be divided by 80,000. If we do this calculation, you would realize that the answer is 75,000. Okay, what we have done is we have simply cross multiplied it, nothing beyond it. It's a simple cross multiplication that we have done. Okay, I hope everyone's got this. So the balancing figure we get is 25,000. Now, fixed cost is a fixed cost. It just doesn't change. Fixed cost given to us in the question is 20,000 rupees. So our profit is 5,000. Guys, that's it. The problem is done. Little bit of smartness, little common sense, and we know how to get the answer. First, we have to calculate this. And remember, in this particular example, 60,000 rupees is our balancing figure that we got. And by cross multiplying, we got the other answer. Okay? Everyone's clear with this? Important question for everyone to remember. Examination point of view, quite an important one. Right. Now, time for us to go to the next one. So let's go to the next one. All right. It seems to be a nice one, big question. What it says, you are given the following information. What's the information that we have? Variable cost 6 lakh, which is 60%. Fixed cost 3 lakh, which is 30%, and net profit a lakh of a rupee, which is 10%. One thing that they have not said in this particular question is that this 10 lakh rupees is actually sales. See how smartly they play. They have given us total cost and profit. And I'm sure if you people happen to remember, we know that sales is equal to total cost plus profit. We have variable, we have fixed, we have net profit. So this becomes our sales, but it is not said anywhere in the question. That is their smartness. Okay, we need to understand this, that they are playing very smart with students' mind. All right. So now what we need to do is We just need to move ahead and try to understand what is given in the question and how we find it. It says A, find break-even point. So let's first do A. What is the formula for break-even point, guys? Anyone knows that? Good, perfect. So we know that BEP is equal to fixed cost by PV ratio. Okay, it is fixed cost by PV ratio. We need to understand this. What is the information about fixed cost? 3 lakh. Have they given us information of PV ratio? No. Let's calculate. So PV ratio is equal to, what's the formula for PV ratio, guys? Contribution by sales. And contribution by sales is then to be multiplied by 100. So multiply by 100. Just a moment. All right, so it's done now. Look at the contribution information. Do we have any information on contribution? No, but we know we can calculate contribution. How can we calculate contribution? Fixed cost plus profit. So what's the amount of fixed cost given to us? Look at the question carefully. Fixed cost is 3 lakh rupees. And the profit given to us is 100,000 or 1 lakh rupees. So we understand that our contribution is 4 lakh. We have got contribution now. We can calculate PV ratio. A moment. Okay. So what will be the formula for PV ratio? What you can see here is PV ratio formula, which is PV ratio will be equal to fixed cost, which is 4 lakh divided by 10 lakh, and then this is to be multiplied by 100. All right, so if I do 4 lakh by 10 lakh into 100, the answer that I get is 40%. We have got our PV ratio. Guys, same what we did in the last question is almost the same approach. Now time for us to find our BEP ratio. Okay. BEP will be equal to fixed cost. What is the value of fixed cost? 3 lakh. And this is to be divided by 40%. So 3 lakh divided by 40%, what we get is rupees 750. 7,50,000. We can do this calculation. Is to be divided by 40%. Okay. So that's how we get our break-even point at 7,50,000. The first part is done. Now second part says PV ratio. Now this is just crazy. We have already calculated PV ratio here. So don't do anything. Don't repeat your effort. Just write PV ratio is equal to 40% and the job is done. You have got your answer. You don't need to redo the whole thing. And the third thing that we need to solve is margin of safety. Okay, now anyone remembers the formula for margin of safety? It's a very simple one. Let's look at this. It says actual sales minus BE sales. Now in this question, what is our actual sales? I told you at the start, they have not informed, but it is 10 lakh. So let's write 10 lakh. Minus, what is BE sales? We just now calculated 7.5 lakh. So let's do that. Okay. 750. And that's it. We've got our answer. We got our BE sales, actual sales available. So MOS becomes 2,50,000. And that's done. Simple question except for this part, but this was the repetition of the previous question. Okay, now time for us to move to the next question, which is question number 10, which says suppose the BE sales is 10 lakh, fixed cost are 4 lakh, compute. Now we again have to do exactly what we have done earlier. All right, but then what we need to do is, first let's start with this, and let's take this down here. Let's say A, which is okay. Let's not do that here. First let's write the basic. At BE sales, profit is 0. Okay, which means that contribution will be equal to fixed cost. Guys, this is something that we have already done, but I'm again telling you people about this so that you people remember it, which also means that contribution at B sales will be rupees 4 lakh. That's given to us in the question. We don't need to worry about anything. Okay, break-even sales are 10 lakh, but the fixed cost is 4 lakh. Obviously, the contribution is 4 lakh. Our basic job's done. Now let's do this. If I am supposed to do this calculation here, what I get is my contribution sales ratio. It will be, guys, we need to just understand that contribution sales ratio is nothing but a PV ratio. Contribution by sales, and this contribution is then to be multiplied by 100. Okay, now what's the contribution that we have got and what's the sales that we have? We just need to check this part. The contribution that we have is 4 lakh, and the sales already given to us in the question is 10 lakh, and this we multiply by 100. So what's the answer that we get, guys? Perfect, that's excellent, 40%. Okay, so we have got our step 1 or the first question solved. We have got our contribution sales ratio at 40%. Now what we need to do is, let's move to the next part. Okay, that's part B, and let's read what it says. Part B is sales price per unit if the variable cost are rupees 12 per unit. Now this is where you need to be a little more smart. Let's do one thing. Let's take total and per unit cost. Okay, we can take total and per unit cost with the help of units. Okay, now sales, how much they have given us? They have told that the sales are 10 lakh. We don't know the per unit price. That's okay. We need to find that. But we know that they have given us variable cost, which they are saying it is 12 per unit. Now guys, understand this carefully. Variable cost is given to us at 12 per unit. What is our total variable cost? Sir, how did you get 6 lakh? Simple. Pay attention here very carefully. The sales are 10 lakh. Contribution is 4 lakh. So obviously variable cost is 6 lakh. Okay. Variable cost is 6 lakh. If I want to calculate units, I will get how many units? 50,000. Let's do the calculation. In fact, yep, we get 50,000 units. Our job's done. 50,000 units. The total sales is 1 lakh. Then what is the per unit price? Guys, simple. Total sales divided by per unit sales. So what is our total sales? 10 lakh divided by total number of units, which is 50,000. We get our answer at 20. So the job's done. You can get the selling price, sales price per unit is equal to total sales divided by total units. Okay, total sales divided by total units. And we know that our total sales is 10 lakh. And therefore, we get this answer, which is equal to rupees 20 per unit, and our job's done. All right. I hope every one of you have got this. Now, time for us to have a look at the third part of the question, which is all right. Let's have a look at the third part. And what it says. Third part reads, margin of safety if 80,000 units are sold. Guys, so simple. First of all, let's write the formula. Margin of safety is equal to actual sales minus BE sales. Okay. B sales, they have already given in the question at 10 lakh. Let's calculate actual sales. Actual sales is equal to units into rate. Now, which will be equal to, they have given to us in the question very clearly if 80,000 units are sold. So units are 80,000 multiplied by rate, which is 20. So guys, 80,000 into 20 is exactly 16 lakh rupees. Okay. Have I got zeros correct? Yes, 16 lakh rupees. So our margin of safety will be equal to 16 lakh minus 10 lakh, which is equal to rupees 6 lakh. That's it, guys. The question is done. If you can understand what they are asking and how they are asking, trust me, guys, solving these questions are very, very easy. There is absolutely nothing that you need to worry about. Okay. Let's take up one more question here today. That will be the last question of this particular chapter. After this, we'll be ending this chapter. So let's start with the first question here. All right. What's the first part in this question they are saying? The contribution sales ratio of A Limited is 50. Okay, you need to understand when they say contribution sales ratio, they are actually talking about PV ratio, which they have given to us as 50%. Okay, and they are saying that MOS is 40, which means MOS ratio, margin of safety ratio, is given to us at 40%. What are we required? You are required to calculate a net profit if the sales volume is 10 lakh. Guys, pay attention. It's a very smart question. Okay. First thing what we need to do is margin of safety is what we need to calculate. The formula is, okay, now we are finding this in rupees, okay, not in units. We cannot find it in units. So it will be sales, which will be then multiplied by rate of MOS. All right. So what is the sales given to us in the question? 10 lakh rupees. Let's do this then. So this is equal to 10 lakh multiplied by, what is the rate of MOS given to us? Exactly 40%. We can see here. So which means what is going to be our margin of safety? 4 lakh rupees. We have got our margin of safety. Now we will use this to calculate our profit. What is the formula to calculate the profit? Yes, exactly. Profit is equal to margin of safety, which is then to be multiplied by our PV ratio. So margin of safety, we have just now in fact seen it at 4 lakh, and PV ratio is given to us ready-made in the question at 50%. So which also means that if we look at this thing carefully, 2 lakh rupees is what we are getting as the answer. rupees 2 lakh. All right, so we have got answer of rupees 2 lakh, and that's it. It's done, guys. It's so simple as this. Important thing, these two formulas normally people tend to forget. I want you people to remember these two formulas carefully. Most of the students would normally avoid learning them because they normally come at the end of the chapter, right? And by the time we reach, we start ignoring it. Make sure you people remember it. Quite a few times, quite a lot of universities have asked this kind of a question for 10 marker. So guys, be strong with this, okay? So that's it in this video. That's it in marginal costing. If you people have any questions, you can always post your comments. I'll get back to you. Till then, thank you guys. Take care.